This has been a rough 2022. Is there anything we can look forward to in 2023?
Hey, Dominic, thanks for having me. As a matter of fact, we think there probably is. It's not going to feel like it for the first couple of months of 23, but we think by the time we get in the second quarter, and certainly by the time we get in the second half, there's going to be a lot of tailwinds at the back of this market. Most of the things that were headwinds this year, talk about inflation, talk about zero COVID policy out of China, talk about the Russia-Ukraine war. We're looking for all of those things, frankly, to be reversed and really turn into tailwinds by the time we get into the summer next year. And that should probably provide a pretty nice boost after what is likely to be a rocky first quarter.
That's an optimistic viewpoint, Scott. And I'm an optimist by nature. I'm a glass half full guy. But there are no signs right now that the Russia-Ukraine war is anywhere close to resolving itself. China now has another COVID problem. And now because they've ditched the zero COVID policy, they are now seeing a surge in infections over there that could slow down the world's second biggest economy. All of those things that you were saying, they might still be headwinds, right?
Yeah, and they certainly will, for a little bit at least. And look, it's always darkest before the light. And we do think that China has seen some of the light with respect to their very misguided zero COVID policies. And it's going to be a painful reopening. I mean, let's not kid ourselves here. It is going to be rocky. It's going to be painful, but they will reopen because they have to. As far as the Russia-Ukraine war, that call is definitely there's some game theory inside of that, but we do think that will end up getting resolved. But that is really anybody's guess, obviously. But there is no guess with respect to China zero COVID, and there really is no guess with respect to the path of inflation and what the Fed will ultimately do. So we do think that at least two of these three things will be pretty significant tailwinds by the time we get to the summer. Okay,
so let's say hypothetically the scenario plays out the way that you've laid it out, the strategy that you've kind of put in front of us here. Then how do you position? I mean, do we wait now for an opportunity? Is now the time to start legging in dollar cost averaging? We hear that kind of term a lot these days. Is now the appropriate time, or do we wait? And if so, by the way, what exactly should people be looking at on their shopping lists?
Yeah, look, I mean, we think we probably do need to wait a little bit. We still have not seen earnings get taken down. And so for us to get really bullish, we need to see two things. One, we need to see analysts start to take earning estimates down because we are going into what is probably going to be a mild recession. Earnings estimates need to come down some, not drastically, but some. The other thing we need to see is the interest rate volatility market start to normalize. One thing that has occurred to us over the last 6 months is that interest rate option traders are pricing the 2-year yield in the United States move 8 or 9 basis points a day, every single day for the next 6 months. That is frankly kind of insane for the world's risk-free asset. So when we see earnings estimates get taken down and we see interest rate volatility expectations normalize, those are going to be the big signs for us to get more bullish. And we think that is probably going to be sometime late first quarter, early second quarter.
I was going to say the timing is then it suggests that you have to wait for this coming earnings season to get kind of that last data point, right?
It does. I mean, look, there's still probably a little bit too much optimism that the consumer can carry us through, and we're going to avoid a kind of a nominal GDP recession. That is, we think, a little bit too glass half full. But we do think by the time we get into the spring, some of these things, some of these fears are going to be in the rearview mirror. Like it's going to be known. And by the time we get there, it's probably going to be too late to buy hand over fist. So you probably do have to start a little bit earlier than you think you do. All
right, Scott, we've just a few moments left here. What is your favorite sector, industry group, stock to be in for 2023?
First half energy, second half tech.